Singapore's core inflation, which excludes accommodation and private transport, has eased to its lowest since December 2015. It was 0.3% in January, down from 0.6% in December last year. Headline inflation held steady at 0.8%.
From tuition to healthcare services, these were more expensive just last year, but they've since registered a drop on year. And with a steeper fall in retail cost, Singapore's core inflation is now at its lowest since 4 years ago, at 0.3% in January. One economist says preschool subsidies from the government are a contributing factor.
Education is actually a component which hardly sees any declines, but in January we recorded the first decline in 10 years' time, and this was because of the extra preschool subsidies that were rolled out in 2020. PM Lee announced in National Day rally last year that more families will qualify for additional preschool subsidies, with the income ceiling raised from 7,500 to 12,000.
But while the inflation for some services like education may have declined, this does not mean overall inflation has fallen across the board. Headline inflation is held steady at 0.8%. That's partly due to rising accommodation costs as housing rentals rebounded for the first time in 5 years. Private transport inflation also saw an uptick, with car prices steeply rising on the back of higher COE prices. But economists expect the COVID-19 outbreak to further lower Singapore's inflation.
It has an impact on the labour market, so it will probably cause firms to freeze on hiring, and perhaps wages will also see some softening. That could reduce consumer demand and hence create deflationary pressures, especially for the retail prices side.
We are essentially staring at some significant risks coming from the COVID-19 outbreak. I think this will definitely weigh down on growth outlook for Singapore. And if the situation continues and worsen, it will have a knock-on impact on inflation.
Mr. Seah predicts that this might lead to MAS easing monetary policy further in the upcoming April meeting. He says this, as well as economic recovery, could lead to inflation gradually grinding upwards in the second half of the year.